Welcome to The Get Down. I'm Cleve Mesidor, your host for today with CP is Out. We are going to be talking about entrepreneurship, startups, founders, and we're going to be doing that with an expert. Our guest for today's episode is Joshua Rivera. He is operating partner and general counsel at Blockchain Capital. Joshua has been with Blockchain Capital since 2018. He's an attorney by trade. As we always like to start the show, Joshua, my butterscotch king, welcome to the Get Down.
Hi, Cleve. Good to be here. It's good to see you.
Good seeing you. Thank you for joining us. Well, I'm excited to dive in, but before we do, tell us a bit about your journey into Web3 and DeFi, especially since you've been in this space for so long.
Yeah, so I began my career. I'm a lawyer. Unfortunately, for most everyone else, I go around apologizing for being a lawyer to everyone. But no, I began my career at a large law firm in New York called Sherman and Sterling. Very good law firm. Learned a lot, but I was representing banks, and which are like now the bad guys for crypto. It was, it's a very different kind of feel. Like large institutions were representing them doing very complex cross-border international transactions. So lots to learn and lots of really good training. And it really kind of like started my career well, but I didn't love the kind of the client interaction. You're kind of working across from the VP of such and such, and they need you for kind of some of your marginal expertise, but otherwise they're using you to kind of do all of the administrative heavy lifting that they don't want to do themselves. And so from a macro perspective, those deals were really fascinating to think about. The day-to-day of them was extremely tedious. And so, I started looking for kind of something a little bit more engaging kind of on the client level and more exciting to think about. I moved to Cooley after a few years at Sherman and Sterling. This was all in New York. At Cooley, they were building up their New York office, and they are traditionally a tech firm that advises clients doing tech startups and advises venture capital firms investing in the tech sector. Cooley and now has, they've expanded to do a lot of other things, but that was kind of like the foundation, the bread and butter. And so I was excited about that and jumped over and started doing more tech focused things, including, representing venture capital firms, representing startups. I also did some IPOs, particularly kind of on the pharma and biotech side, which was great training and really great experience. But then there were a few crypto lawyers who had come over from other firms who were representing companies. This was in 2017 that were doing tokens, and very specifically ICOs or SACs, which is a simple agreement for future tokens that has kind of fallen out of favor since then. But I was just fascinated with what they were working on. I got to know them really well, and then started doing research on what crypto was. I read the Bitcoin white paper, I read the Ethereum white paper, and started to gain a really significant appreciation for crypto as a new tech frontier. I really felt like it changed the framework, kind of the paradigm for how we organize value in society. And so I got excited about that from a technological perspective, but I also was excited about it from a legal perspective. I thought our existing regulatory frameworks don't really contemplate what we're doing here, because we are creating ecosystems that are by design disintermediated. And so for me, it was a great opportunity to generate a very specific advanced expertise in a very short period of time. So I kind of jumped in and had the amazing providence to get connected with the Blockchain Capital partners and join in mid-2018.
Wow. So from being an attorney to joining a firm that's focused on tech, and then finding crypto. For a lot of our audience, they often wonder, how do people end up in this space? So in 2018, you ended up at Blockchain Capital, which was actually started in 2013, right? It was Blockchain Capital started the first venture capital fund dedicated to crypto builders. And it's now 10 years later. And from the research I did, it has over $2 billion in assets under management. And so your firm saw the potential of crypto for being an ecosystem for startups, for a whole new market to evolve. What was the impetus Right. And is for you, what is your role now there?
Yeah, so Blockchain Capital started a really fascinating history. The partners, the co-founders and current co-managed partners, Bart and Brad Stevens, they're brothers. They are kind of, Silicon Valley natives, son of Paul Stevens, who was one of the partners of Robertson Stevens, which way back in the day was an investment bank that took many early tech firms public. So like EA, the video game fame, Apple, and a few others. So they had always kind of been locked into tech, but also kind of this financialization of tech. And they were lifelong gamers, so always interested in gaming. And they kind of realized that in many games, for example, World of Warcraft, there are in-game economies that people take very seriously, right? They play these games, they take these economies really seriously. They care about kind of the items that they hold, they care about the way that they dress, right? And they actually assign kind of real world value to these natively digital assets. And so as they were kind of thinking about that, this is in kind of the late aughts, they found out about Bitcoin and they felt like, oh, wow, this is a natively digital asset that also isn't created by someone else, right? So a game developer who has an in-game economy, that game developer can choose to change the economics in that game whenever they want, right? And so they can prevent players from selling those assets to other players unless it's under very specific circumstances. And so for our founders, it was really interesting to see a completely decentralized, non-controlled by any one entity digital asset environment in Bitcoin. So they went around to the other venture capital firms in Silicon Valley, and they said, "Hey, we'd love to invest in your funds, but we want you to invest in blockchain, in crypto." And all the other Silicon Valley firms were like, "Please kindly leave our offices. Like, we're not interested in crypto." And so they're like, "All right, well, if no one else is going to invest in this, we're going to create our own fund." And they actually did something really innovative where it was a small fund. Our first fund in 2013 was $1.5 million fund, so tiny. But they would go to entrepreneurs building in crypto, these very, very early entrepreneurs, right? You got to remember this is like 4 years after Bitcoin started, right? Like barely anybody knew what was going on. But there were some entrepreneurs. They said, "Hey, in exchange for some of the equity in your company, we will give you a limited partnership interest in our fund." So that gives you an opportunity to diversify, right? You don't have to have all your eggs in one basket in the company that you're building. And that gives our fund the opportunity to, with a limited amount of resources, gain some ownership in some of the companies building in the space. Yeah. And so since then, we've grown, as you mentioned, to over 2 billion in assets. It's been really amazing. I joined, as you mentioned, in 2018 as the general counsel. And my role is I kind of do four things. I oversee the operational, administrative, legal function. That's the stuff that I really dislike, but nonetheless have to do. But it's just all the, it's like admin, operations, etc. And that's kind of like what you would expect for an in-house lawyer, kind of overseeing those things. I then also oversee our deal-making legal function. So that stuff is a little bit more exciting because, there's a lot of strategic thinking, kind of novel thinking around how we structure deals to make sure that we're incorporating concepts of decentralization and, token networks and token economics. And so that can be really engaging. And then I sit with the investment team so that the partners promised when they enticed me to come over that they wouldn't have me in a back room just pouring over contracts, and they made good on that promise. So from day one, I sat with the investment team, even though back then I was not a good investor. Thankfully, 6 years on, I have learned an incredible amount about investing, and now I think I'm decent. So it's been productive. And then the final thing is I head our regulatory and policy practice, and there are two components to that. One is engaging with our protocol teams and portfolio companies to help them understand the regulatory environment and how it might shift over time. And the other is engaging and interfacing with policymakers, Congress, Senate, and regulators. So I spent a lot of time in DC trying to help them understand why crypto is important, why they should care about it, and why our existing regulatory frameworks are not adequate, not sufficient, not really appropriate for most aspects of crypto regulation. We need something new. So yeah, that's kind of the role I play. I spent a lot of time on the investment side and on the policy side, and that is really exciting for me. I think it is the most fun job a lawyer can have, which is a very low bar. So don't get excited. But I'm really thankful to be in this position.
Very fascinating. We're going to get to policy a little later, but you are also on the board of directors of the Blockchain Association, which is how we connected. The Blockchain Association is the largest advocacy group in Washington, advocating for the industry. Tell us a bit about your role there as well.
Yeah, so the Blockchain Association, I believe, is the leading trade association for crypto policy. It's an excellent group of member companies. I think there are over 100 member companies now that really represent one of the broadest spectrums of the crypto industry, right? You've got people doing everything from creating layer ones to creating scaling solutions in layer twos to providing on-chain services, providing off-chain services, right? You've got centralized exchanges, you've got decentralized exchanges and other decentralized applications. You've got data analytics firms, right? So it really runs the gamut, which I think is an incredibly impressive feat to like collect that many disparate types of entities into one trade association. And I really believe that my role there as director is, there's a couple things, right? One is just to like help make sure that the organization, the BA, just like runs like a professional organization. So to that end, we have board meetings, we review financials, right? We do all the nitty gritty of like, are we being as kind of effective and efficient as an organization as possible? That's not unique to any director role. It's kind of what happens. I think the more interesting and more unique part of my role is really trying to engage with as many of our member companies as possible and understand what are the things that you care about, what keeps you up at night, what are kind of the criticisms that you have of the Blockchain Association, what are the things that we're doing well, right? How can we better represent you as a member of this very vibrant crypto community to policymakers in DC? Because that's ultimately the importance of association, which is to represent the legitimate interests of the crypto industry and the broader community to Washington, D.C. policymakers. And so, it's really important for me as much as possible to try to kind of understand what people care about, what they're struggling with. And that's really hard because people come from, as I said, lots of different verticals in the industry. That means that everyone kind of cares about different things. And so I think the challenge is, can we craft broad enough policy objectives that are important and supportive and advancing of the crypto industry and still kind of serve everyone in a relatively equal way? It is not easy, and I cannot say that we nail it every time, but that's certainly the goal and the objective.
Well, it sounds like, you're wearing big hats, both at Blockchain Capital and at the Blockchain Association, but we are at the future frontier. This is the starting point. So lots of work to be done. But let's shift focus to founders and startups. Your firm seems very excited about founders. When you talked about, in 2013 and, this desire to obviously target the gaming industry, but really even bring in founders to part of the organization. So are there any projects, they could be portfolio companies or other projects that you see out there, any startups or founders that you actually find compelling that you can share with our audience?
Yeah, I can kind of run through some of the recent investments that we've done. Some of the bigger ones are kind of more well known. So we had, the leading WorldCoin's Series C round. So that was last year, and we're really excited about that. It was controversial kind of at the time. I'm hopeful that people are kind of starting to understand why we think it's important. But effectively, we think, with the proliferation of AI and generalized AI, the ability to distinguish human actors from non-human actors in a natively digital world is going to be increasingly difficult, if not eventually impossible. And so we see crypto in general as kind of the antithesis of the proliferation of AI. Not in that like, oh, proliferation of AI is bad, and so we need something to combat it, but really as like AI is about replicating work and allowing content to be produced really quickly and rapidly and kind of broadly. And crypto is about identifying uniqueness, right? So like making sure that you cannot like replicate things in a way that obfuscates the value of kind of the individual unit. And that's why crypto allows us to have natively digital value, whereas before it was really hard to do that. And so we're really excited about that. It's a big big company at this point, Sam Altman, who has done AI, one of the founders there. But we see that as emblematic of our general focus on infrastructure. So we do a lot of infrastructure. We all have also been very Ethereum focused over the years. We're trying to diversify from that because we have lots of other great chains. But one of the recent deals that we also led was EigenLayer, which is introducing kind of middleware infrastructure for Ethereum. We're very excited about the capabilities that that will enable. EigenLayer at base is really trying to allow applications to borrow from the security of a base layer Ethereum. And that allows those applications to launch at a much lower cost, right? And so hopefully that contributes to more people being able to build on the ecosystem and create really useful things that, everyday people who are non-technical can participate in. We're very interested in zero knowledge technology. We see that as one of the avenues that layer ones in particular will be able to scale. We led a round for Risk Zero, which is creating zero knowledge proving markets across various applications, whether it be on layer ones or for Web2 applications themselves as well. So yeah, we've done a lot. We have, people ask about gaming. We've done some gaming investments recently, and we're very excited about how those are going to develop over time. One is Gameplay Galaxy, which is developing a really interesting motorbike racing game called Trial Extreme. And we think that the way it has been built is really thoughtful around natively digital assets, how users can own those assets and use them effectively in game, but also, have the ability to monetize them or transfer them or value them in other particular ways outside of the game. So yeah, there's a lot. We do see a lot. I think we field about 2,000 pitches in one form or another a year. And so we most of the time say no, because we only have 170 portfolio companies and projects that we've invested in. But it's great for us to have this opportunity to see the industry kind of from the 30,000 foot view, see what people are doing, what people are excited about, how, sentiment is shifting, where there is momentum in which sectors and which verticals. We try to keep an eye on all of those things as we make investment decisions.
I love how dynamic your portfolio is across the tech ecosystem. When you look at the fusion of technologies that are impacting the innovation economy, seems like the blockchain capital, you all have your hands in just about everything from AI to gaming to blockchain, even across the blockchain spectrum, your Ethereum, Bitcoin. Now, there's a project that I love, that Blockchain Capital invested in during COVID, Spatial. And I would love to hear more about that project. Obviously, Spatial was important to me because, it was a young Gen Z Black founder, Idris, and it was a $10 million raise. And I believe Jay-Z's investment firm came in on it. But tell us about where the project is now, because I know they had a blockchain component to their portfolio. So tell me more.
Yeah. Idris is a really, really special founder. I think I still remember when we took kind of those first pitch calls with him. Every time I would get on a Zoom with him, I'd have to ask him like what he was wearing because his clothes are just so dope. So what are you wearing? Who is that? He's got an incredible personal style, but he's also just really, really smart, has a really fascinating background. He's from Compton and he is very much integrated into diverse culture. It's kind of how he grew up. And then he's also had this really amazing opportunity to connect with artists, both on the music side and on, the fashion side and in other artistic mediums like Jay-Z and others. And so, yeah, I think we really fell in love with Idris and his ability to understand tech really well and connect that tech to these other kind of non-traditionally tech worlds, right? Like fashion and music. And Spatial, yeah, I think what I really like about Spatial Labs is leveraging blockchain technology without selling blockchain technology, right? So Spatial Labs doesn't come to you and say, hey, we're doing crypto, we're doing blockchain. They're not interested in doing that, right? And I think that is actually really helpful, particularly when you are communicating with a section of society or a particular culture that is not crypto native. And I think that's where Idris is really compelling as a founder, that he can kind of speak multiple different languages, right? He can code switch between different cultures and different communities. And so, yeah, so I think we are excited about the opportunity for Spatial Labs to utilize crypto technology in a way that gives people confidence in what they are managing, what they are dealing with, right? So we talked about AI and how AI kind of proliferates content. Well, there's, you can do that in with physical things too, right? You could have a lot of different types of physical things, and it can be difficult to know like what is real and what is not, right? There's an enormous like counterfeit market in the world. And so facial's ability to kind of understand what is fashion forward and what is cool and kind of what's in culture, and ability to leverage crypto in order to validate those things, right? To bring legitimacy to people's use of certain, whether it be clothes or music, right? Like that's where we're really excited about what Spatial is doing. So yeah, I just was great. As a matter of fact, it's been a while since I connected with him. So I'm gonna reach out to him after this.
Awesome. Well, I'm glad that we can get him back in your radar. And I love how you
Yeah.
describe, Spatial and Idris. I say Idris because, Idris is just always on my mind. But, in terms of, it's not about blockchain. It's about he's an entrepreneur, right? He's leveraging innovation. And when you look at entrepreneurs and small businesses, that's what they are. They're trying to innovate. They're doing what entrepreneurs and small businesses do, right? They're looking at projects, they're coming up with ideas. And blockchain and cryptocurrency and AI, they're just tools for these entities to solve problems, to innovate, to actually iterate, to bring things to the next level. And that brings us back to the policy piece because, in America's economy, its backbone, its engine is still small business, it's still entrepreneurship. But these entities, are struggling to compete, and innovation is how they're going to compete. But unfortunately, because of the lack of regulatory clarity, many small businesses and entrepreneurs, even those outside of our crypto bubble, because of the uncertainty, they have an issue with innovating in a compliant manner because we don't have the rules of the road, right? We don't, Washington hasn't set the lines. So as you're doing the work that you're doing for Blockchain Capital in collaboration with the Blockchain Association, what is your message to policymakers, especially given the founders that you represent?
Yeah, I'm really glad you asked this question because I've spent the last 7 years basically like going to DC and trying to convince policymakers that I'm a real life adult human being. And most of the time they're like, nah, I don't believe you, which is fine. Like I'm used to it now, but it's just been, it's been a struggle, it's been a long time. And so it actually, in many ways, the last few weeks of May 2024 have been really validating from a professional standpoint in terms of how we are advancing as an industry. But the question is, okay, like what do I tell them? What's the message to policymakers? I spend a lot of time helping them understand what is the key innovation that we're investing in, right? People will talk about like crypto, is it cryptocurrency? Is it Bitcoin? Like what is the key innovation? And what I like to kind of remind people is that over the last several thousand years of global commerce has only been able to scale via a concept called an intermediary, right? Why is that? Well, like we don't all know each other, right? You know some people, you don't know others, but you would like to engage in business with people that you don't know, because otherwise you'd only, like your 10 friends would be the only people that you engage in business with. And that just, it wouldn't scale, wouldn't be very effective. So over that time, what we did was we said, okay, we're going to establish kind of institutions of trust, right? Institutions that enable two people who don't know each other or multiple people who don't know each other to transact with each other via that institution of trust because they all trust the institution. And the institution is going to sit in between those transactions and make sure that everybody is, treated fairly. And that's great, right? Intermediaries that we've institutionalized over the last several thousand years. And then in the United States, right, we have codified those relationships in regulation over the last 100 years, call it. And that's fine, right? Like there's nothing inherently wrong with those institutions or inherently wrong with the concept of institutional trust. But there are kind of side effects of that. And one of them is that, well, institutions have been institutionalized for so long that they don't have a lot of incentive to innovate because they just feel like, well, everybody needs to use me. So I kind of just get it made. I sit in between these transactions. I take rent. It's great. Institutions, many of them are trustworthy, but they also may not be trustworthy, right? I don't know if you remember a couple of years ago, like Wells Fargo was like making up bank accounts, right? To like, juice their, their stock price. I'm like, yeah, that doesn't typically happen, but it can, right? Because you have institutions that are made up of people and people can decide to do something that they shouldn't do, right? Institutions also are a central place of failure, like something could go wrong, even if it's not intentional. And they're also a target for attacks, right? So people can go and try to affect the records of the institution for their own benefit. And so what we have done in crypto, right, is we have said, look, we have this amazing technology that allows you to connect with someone literally anywhere in the world, right? It could be, you are in the United States, you connect with somebody in, Pakistan, or a small island in Asia, right? In the South Pacific, or in, Mozambique, wherever it is, right? You could connect with them, you could FaceTime them, you could see them, you could talk to them. The transfer of data is fast, it's faithful, it's free, basically. But if you want to send that person any amounts of value, it is very, very hard to do. Why? Because our transactions and value are via all of these intermediaries. And so the cost of doing that balloons when you're doing it via traditional means. And so we have built in crypto a way to leverage the technology that we have created over the end of the 20th century and beginning of the 21st century to enable people to exchange value with people that they don't know, but critically not using intermediaries. So that's the key, right? Is that we can now do that without an intermediary. You can have trust, you can have confidence that your transactions are going to be correct and generally faithful without needing to rely on the trusted intermediary. So that dramatically lowers the cost of those transactions and allows you to scale those transactions globally. But when you talk to policymakers, you have to remind them, hey, look, like we've had intermediary scaling of economic and financial and commercial exchange for so long that all of our regulatory frameworks are built around that idea of an intermediary, right? All of our frameworks, maybe not all, but most of our frameworks, right? Most of our frameworks latch onto that concept of the intermediary, and they are built around that concept of the intermediary. And so when you try to transfer those frameworks from intermediary dominated ecosystems of value exchange to ecosystems of value exchange that are by design not intermediated, right, or disintermediated. When you try to do that, it doesn't work. And so it doesn't work because like one is bad and the other is good, or like one is incorrect and the other is correct. It doesn't work because they are different. They are fundamentally different. And so if we actually want to have good policy outcomes from how we regulate digital asset ecosystems that are disintermediated, if we want that, that means we have to come at it from a different angle, from a different viewpoint. And that is really, really important for us to understand as a policy making society where we want these ecosystems to be regulated. It's not that we want them to be unregulated. We want them to be regulated, but they need to be regulated in a way that is fitting, right? That is congruent with the way that they were designed, right? And we just don't have that right now. So that's the effort, and that's part of the crescendo that has happened over the last several years that has kind of feels like it's starting to kind of like come to a head in DC right now, which is really, really exciting.
Yeah, no, and thank you for that explanation. Because for a lot of people out there, they think, what's wrong with regulation? And you really walk the audience through about how things have shifted and why we just need new rules that fit the times, that fit the new tools that we have. Now, we do have to wrap up, but before we go, what advice do you have for aspiring founders or anything you want to compel the audience to consider?
Yeah. Yeah, look, first of all, if you're a founder, like do it. Be a founder, be, as excellent a founder as you can be. We need people who are experimenting and being innovative and growing. Like I said, we field 2,000 pitches a year. We mostly say no, but that doesn't mean like we don't appreciate that people are building in the space. And like not every project is right for blockchain capital, but we want as many people as possible experimenting and creating these labs of innovation so that we can continue to move things forward, right? That's the only way we're going to continue to grow as an industry, is for people going in and looking for problems, right? So I tell a lot of early founders, you want to find a problem that is real, right? And then you want to look for solutions for that problem. Oftentimes, we can kind of like come up with like a really cool solution, that would be cool if there was a problem that needed that solution. But that's a bit backwards. And so there are plenty of problems in the world. There are plenty of problems in crypto. Find some of those problems and see how you can develop meaningful solutions around them, and keep going, keep innovating, right? Our job as venture capitalists are to enable people to fail. Actually, like most of the projects that we invest in are not going to be wildly successful. Like most of them will fail. But the beauty of it is that we enable that failure, right? We enable people to experiment and to try and to fail. And hopefully we will be doing that for years to come. And there will be other VCs that are doing that for years to come. But that's how we have found really successful projects over the last 50 years of venture capital investment and innovation. And then the last thing I'll say is, as we think about regulation and innovation, regulation always follows innovation. It's never the other way around, right? And that's just how it has to be, right? Like the regulatory frameworks are designed to support society in protecting ecosystems and actors in those ecosystems, but it has to be appropriate for the types of innovation that we have developed up to today. And so even though, there's a lot of uncertainty, even though, we're not entirely sure what these regulations are going to look like, the most important thing, right, the thing that keeps me coming back to this industry and this job every day is that innovation happens, right? And innovation is happening. And it's really exciting. So keep innovating, keep growing, keep pushing. Regulation will follow. I'm very confident of that. And in the meantime, we will continue to create things that will benefit society, as time goes on.
Love that. Love that. Find a problem that is actually a problem. And, I love the fact that you mentioned VC investment enables failure, because a lot of projects fail, but they spark innovation when you actually, oftentimes it is the failure that forces you to see better solutions. So for those out there who are not getting VC funding, you know what? You can enable your own failure, because that iteration, that process allows you to find new solutions, but it also allows others to do that as well. And absolutely, regulation will follow innovation. We're still at the starting line. So Joshua, thank you so much for your time. Let the audience know how best to reach you, your website, your socials. What's the best ways?
Yeah, so I'm on Twitter. It's H as in Henry _Joshua _Rivera. It's very long. I actually regret making that my handle, but I did it and now it's done. I can't change it. So, but you can find me on Twitter. You can find me on LinkedIn. Those same letter combinations will work. You can always look up Blockchain Capital at blockchaincapital.com. If you want to verify that I am a real person, I'm on the website, so there's some evidence there, and you can check us out there. You can see our portfolio. So yeah.
Well, I can definitely verify that he's a real person. And so thank you so much, Joshua, for joining us. And to our audience, our Butterscotch kings and queens out there, thank you for joining us. We hope you enjoyed the conversation, and tune in for our next episode of The Get Down. Thank you.